following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the 11 o'clock to 12 o'clock hour on TFNN and our daily lineup. My pleasure to be here. Of course, straight after me, you get Nico and Paige. Great education and health and programming rest of the day with let's see, that'll be Steve Rhodes, right? So Nico and Paige, Steve Rhodes. You've got Dave White, Tom O'Brien, and then Tom O'Brien with Dave White. Fabulous programming. All right, let's go to the numbers. The Dow's up 33 at 17,083. The S&P is up 3.9 at 2,017. Back to 2,000. Interesting, huh? Comp index is at 48.34, up 23. You got gold up 12 at 11.56. Silver's up 7 cents at 15.84. Platinum's up 29 at 9.78. What's really important here is that high-grade copper's had a really big move here. It's up 7 at 241. Crude oil is at 49.88, up 45 cents. Bonds are up 10.30 seconds with the TLT at 122.29. Dollar was down earlier, down 49 at 94.91. Very interesting because gold actually managed to go to leg C as the arch formation. Remember, let me do that right now. So how should I do this? About 7 different things I want you to get you to do. All right, we'll go step by step. I spoke about a dollar, and it's really important to look at the dollar right now. Why? Because the commodities have had their first pretty decent rally. How can I put that? They've had rallies before. This is the first time that they've had pretty good rallies across the board with the technicals improving, and that's going to be important with the Friday close today for the weekly charts. What I had said, and I circled a little oval over there, I said it's probably that fulcrum right there, that where the two trend lines cross. That's going to be very important. And that level I said was 94.90. The low today in the dollar has been 94.72. It's trading right now at 95. This is the dollar index. Now, I haven't finished the notations here in the 120-minute chart, but you can see that the histogram is negative right there of the MACD. MACD is negative. Stochastics at 12%, trying to rally, but really not getting off the ground. I suspect it's going to make a little arch formation, try to rally and then retest. That's going to be the big test for the dollar between 94.50 and 94. Close under that says, aha. Back under the 200-period exponential moving average, now there's a good chance you're going to start working your way towards the lower part of the 93s, the high 92s, and we'll see about that. The last low was at 92. Did I say 92.62? Yeah, 92.62. Type that in. 92.62. I believe that was on the 24th of August. Let me double check. 24th of August. That means gold in leg C is about to tackle the high of 1169, was it? 1169.80. 1169.80, 1169.80. And that was the 824 high. Okay, so this is leg C. We could have a powerful move here trying to get to the 1170 level of the 200-period exponential moving average. Now the MACD is at 81%, and that's good. Sorry, the MACD is strong, and the stochastics at 81%. In the 120-minute chart, you do have a leg D here in this cup formation, and the stochastics at 83%. So far, that's good. Now, that leads me to a technique. Since this is Technical Friday, I had a number of questions about this, so let's just go to it. In the context of chart formations that I've been studying over the many years, decades actually, there's a pattern that I came across back in 1984 when I was hand charting. And it was just a mystery to me how this worked out, because there was a move that kept going higher and higher, and it had this long leg to the upside. And then the pattern made a consolidation. I used to hand charts. I was on this engineering paper with a ruler and pencil, and it was only the closing price. And then suddenly the chart pattern started to go sideways. And I thought, that is interesting. I was expecting it to pull back very sharply. That's where I got this high-level consolidation term locked in. And then what happened was, from that moment on, I'm expecting now a pullback to the downside, but it wasn't the usual rectangle formation. It was more like an oval formation. That oval formation is really important in this particular pattern. I found out later. Then there was a break to the upside, and then a little tiny consolidation, and then plop, the price came all the way back and went into the body of that oval pattern. I saw this happen many times, and I thought, this is a pattern I've got to lock in, and I used it only for the Dow. It did occur in other places, but I treated it as this very special me and the Dow compatibility. Well, it turns out that it happens in many in many charts. It still happens, of course, in the Dow, but I treated it now as a template that I could use as a fractal. Doesn't matter on the size, but it could go anywhere. So let's see if this is going to work. And the leg is not the Chapman wave peaks. It's just a single move to the upside. That creates the leg. Why? Because at a certain point, in this case, it went from 1883, the round number low, to, I call this the Freeman low, and to 1980, the round number high. That was at 4 o'clock on the 5th of October. And then it pulls back. It goes to a D, and then it makes a lower low. Then it goes to an E and pulls back, goes to an F, and it starts to pull back. So I've treated this as that pattern. It's not exactly the way it normally works, but the pattern itself is pretty precise, because it's got single leg up, a fulcrum with the body. Sometimes the neck is very short. In this case, the neck extended, and it went from the 1960.50 low on the 6th of October, 6th of October at 8 p.m., 10 p.m., sorry. And then it took the breakout and went to B, C, and today it's making, right now, it's making a D if by 11:30 there is no new recovery high above 2014 in the E-mini. I am talking about the E-mini. Okay, case closed. Leg, body, neck, head is forming. When the head is completed, any move that takes the E-minis below I guess that's going to be 1998.75. That's 10 points, like 100 points down in the Dow. I don't know what's going to do that. But at any point we start to get a break below that level, then you're looking at the potential to retest the 1985.50 area, the breakout at peak F. That was the high. 1991.25, I should have said. Sorry, 1991.25. I'm not sure where that came from. Let me get rid of it, just as well I checked. 1991.25. Not as bad. All right. So that's just mere... It's a lot. Oh, that's a lot. So that's 9 points, 18 points. I don't know if we can do that. Anyway, I'm putting it in because this is the pattern. We'll see what happens. Okay, I am anticipating, as I said to subscribers. Terry asked, how do I know when the head is completed? Sometimes the head actually forms what could be called a head, and other times it's just a single move up and then a whoop to the downside. The reversal is the head. Okay, so now that we've got that out the way, the other things that I want to look at, let me just show you quickly the 10-minute chart. 10-minute chart says it could be an arch formation right here. We've made the peak E, we pull back to a trough B and gone up a single leg A, and that says a close on any 10-minute bar, a close below this level right here, right there, a close below 2006.75, just 2.25 points below, would give you a test of this, and then I think we start to slide into Monday or Tuesday. I am expecting early weakness Tuesday. That takes me to the next point. Is this the potential for a very serious move to the upside that could actually get the weekly charts to maybe even make a leg, a peak B and then a leg C and maybe even a D? So now let me explain something. You see the liftoff from 15,942. Everything about this move says it is normally what we would be looking at as a leg A, what I call the leg A, single leg A up syndrome. What's important about this, it came about, and it's very unusual to get a really huge breakout in this particular pattern, where you've had the arch going to a lowercase h going to the lowercase m. Then the larger, you remember the larger arch we were looking for? And then a lower low below the 15,979 low to the 15,942 low right there of the 29th of September. And this is what makes it so important right now, is that it has closed yesterday, this leg D actually. It could even be, no, I'm calling it a D. After it has to recycle to even get to an A. So that's a D. Closed above the 16,933. If you know my work in arch formations, the lowercase h, if it's a successful test, then there's a chance that not only could you retest an important left side peak, which is what we did right there at 16,465 and just smashed right through it, but you could go all the way to the arch high of 16,933, talking about the Dow now. And if you close above it, it says there's a chance that you could now go to the next level of resistance. And that would be this 200, sorry, this would be the 200 period exponential moving average of 17,290. I really need to change the color. Give me a second, it's irritating me. Color, I wanted to go to the kind of orangey color now. How did I do that? So other, let me see, other. There it is. So somewhere in there. Oh, I like that coral color. I wonder if I can get it back. How do you get that mix? Coral color. Oh, there it is. Okay, maybe that's, no. Oh, there it is. Good. A little lighter than that. Okay, so I'm in here, and I want to go lighter. So I'm in here, and I'm going to go like that. Ah, there it is. I'm happy as a clam. There we go. Ready to go. There it is. All right. So it's a little dark for now, but that's fine. We want the dark because that becomes a target line. Now, what I'd say to subscribers, if the Dow closes above 17,050, and where did it close yesterday? Bam, right on 17,050 to the 17,090 area. If it can close above that resistance, immediately I have to think that 17,290 could become a target. Number one. Number two, everything about the character of this move, every one of these 1, 2, 3, 4, 5, 6, 7, 8 higher bars with 2 doji so far. I'm suspecting today could be either down at the close or a doji. We'll see what happens based on a bunch of other things. Now, if I look at the chart, if you don't mind, I'm going to just open it out and squeeze it. Now look at this chart. What do you see? You see that from these, oh, I got to change other things. Can I do that just by lifting it up? Yes, I can. You can see that at other times, those big liftoffs, even like the one from 28th of August, went straight up with the same kind of candles. I'll talk about this, and I'll talk about how important resistance levels are, the rectangle. I'll be back. Basil Chapman, Dow's up 31.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I'll go to my first call in a moment. I just want to say, you see these bars here, the Dow currently right there? Now look at this. This is from the February, what was it? February 5th low in 2014. Doji candle, strong bar, doji candle. That's a tiny little plus sign candle. Green bar, a little bit of a doji, candle, doji, and then it starts a little turnaround. And that gave you A, right? Now, what's very important is look at the other takeoff periods. Look at this one from, when was this? So that's April. And each one of these has these very strong candles until it bumps into resistance and it runs out of energy. This is the one from August the 7th. Look at this. Nice move up, and then it starts to slow down. So I'm looking at this and I'm thinking, okay, we've got many of the same characteristics in this phase here that looks like a takeoff initiation period. But the start was there. So I've got to go back to this chart here and say, in the Dow, so far the rectangle formation is sacrosanct. It has been our box that we've looked at for so long, broken out of it a little bit, closed above it, and now this is the critical point. You've got 92% finally in the stochastic, and the MACD is expanding. Is this the start of a bigger move? So I'll continue with that thought in a little while. I do want to go to Travis in St. Louis. Hi, Travis. How are you?
Just fine. How are you?
I'm well, thank you.
Good. Yeah, I just wanted to kind of come back and talk to you here real quick. It's been a while, and just kind of get a quick update here on what I was thinking. I know I sent you an email a couple weeks ago, and I was talking about I had a lot of dry powder, and I was kind of thinking we were getting close to maybe some sort of a bottom of significance again, and whether or not to start putting a little bit of that back as we kind of came ever closer to that low back on August 24th around the S&P. And we didn't quite get there, but I did pick up some shares in Ford last Thursday.
Very good.
I just put a little cash to work just to start some position because I thought, well, if I'm wrong and we're not going to come all the way back down to 67 on the S&P, I got to start to think about maybe picking up a few longs down here. And that was the first one that I did. I haven't picked up anything else. Still got my Takai, of course, but I just wanted to kind of see what you were thinking, if this is maybe going to be that coda phase that we were talking about.
So the real question you've got, the two-part question. One is this the phase that goes to that next level on the upside to all-time highs, or do we still have to complete the downside move?
Right.
That's number one. And number two is, if, in fact, there is a rally that could sustain longer, regardless of whether it is the next move up to new highs or whether it's the retracement failure mode, you're looking at stocks that have acted well and that you, at least for now, you've got into Ford, and you're looking to say, is this a good thing to do, and is this a period to be also looking at others in the same, not necessarily the same stock sector, but the same category of cyclicals, maybe something like that? Is that the question?
Yeah, it's just kind of like, I picked up Ford because I feel like even if we're still in the midst of this correction, which is, obviously becoming more and more questionable now that we're starting to pressure 2020 again on the S&P, I think that particular area, and I know you kind of feel the same way, the auto area should hold in pretty well, even if we have another slide to the downside in the next couple weeks.
So here's the big thing. Number one is, as you know from my newsletter, I've been quite persistent in saying there's a bifurcated market. I want to be short and I want to be long. Some of the shorts have been ideal shorts, but the entry points have not been perfect. Or when I've got them, it's the day that they have the pop up to the upside because they have very tight buy stops. But in fact, they are still the weak sectors. However, there was one stock yesterday that we had shorted, which looked like it was going to be the perfect short right for this time frame, and then the weak, jobs and everything comes out perfect for this particular stock, and the stock spikes very sharply to the upside. I had to consider, and I'll tell folks what it is now because we have no position in it, and that is Cintas. And Cintas is overalls, clothing, rentals, and all. It's really key to telling me, not instantly, always a little belatedly, maybe not too far late, but a little late, that it tells me a lot about the economy. And what happened yesterday, instead of breaking down from a peak D, which I thought it would do, and peak F in the weekly chart, and even a peak F in the monthly, bam, it rallies, and today it broke to all-time highs. This is saying to me, I have to be looking even closer, and I can make it selective so that I don't always have to be looking at the market trend. So let me get back and I'll explain what I'm looking at, because I think Ford fits in that category. General Motors, General Electric. I'll be right back with Travis.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So here are a couple of things that I need to go through. So, Trevor, what price did you get in for Ford?
Let me look here. It's a good question. I know it was last Thursday.
Okay, well, if it was last Thursday.
But go ahead and keep talking. I'll let you know.
So it must be around about 1350, something like that. 1370.
1359.
Okay, there you are. Okay, and we're trading at 1486. You see, this is the beauty of getting in. As your instinct tells you, if I'm going to get in, I've got to get in now. And then the price actually moves in the direction that you're anticipating. Why? Because you've got a real nice 1-point cushion. So the 1437 level on Ford is the 9-period exponential moving average. Now, this is the really strange thing. The action that I've seen over the last week to week and a half has been exactly what I'd be looking at as a major buy signal. Now, let me explain what I'm looking at. You've got GE. GE was at 19.37 just over a month ago. It's trading at 28.19. This is the kind of move that you get over a 2 or a 3-year period, let alone a 2-month period. So this is a magnificent move, except it's in D. That's number one. Number two is, it looks like a brand new buy signal, and it's in leg B in the weekly chart, and the monthly chart is only 28.68. Today's high is 28.20. It happens to be 49 cents off its 49 points off its 2008 high of that was the level that was at in September of 29.28 to 22.16. So it's within fractions of going into this candle from 5 years ago. What am I talking about? 7 years ago, right? So I cannot say, and GE for me is a bellwether stock, a short-term bellwether stock. IBM is one that I've included for years, decades actually, in my quartet. And that's trading, was at a lower low. So 140.62, 140.56. So it went to, this is leg A in IBM. Not a great looking monthly chart, but the weekly is now improving from a trough E, and it's improving. It's not great. Triple M has had a spectacular move from the 134 round number low of the 24th of August to today's high of 150.65, almost at the 200 period moving average, also in leg D. And UTX, the fourth one in my Dow quartet, is in leg C, and leg C is at a recovery high into past the gap, the down gap of the 20th of August, where the low is 95.82. The high today is 95.92. MACD and stochastic are looking great, and the weekly chart is just starting to turn up. So when I put this together, I say, that's telling me that any major, you remember I spoke about an internal low and a residual low?
Yes.
It's saying to me more and more that the residual low for some stocks could be higher than where they were on August the 24th. Right. Others will have to break it because this is a bifurcated market. And that starting your positions now, especially with good entry points over the last, except for the last 2 days, prior to the last 2 days, gives you a nice cushion. Getting in now means that you've got to do a little bit more homework, and you've got to be prepared to sit down and look at your chart and say, gee, UTX at 95 could quite easily get back to the 92, 91 area as key support, and then maybe it goes on to the next move up. So that's 3 points, that's 5%, 7%. So I'm looking at this and I'm saying your entry is perfect, number one. Number two is, once you've got your entry, you can look at the same sort of rhythm on the pullback that I'm expecting early next week to say, okay, this is a time in a particular stock that I really like. This is when I'd like to get in. But because it's off the August 24th low and maybe sharply off the 24th low, I have to have some kind of a stop, and it's going to have to be wider than I want, but not wide enough to cause me any financial harm. So I'm looking at it, and I'm thinking that your Ford is perfect. Syntas is telling me, hey, if there's a breakout from here, this could be a pretty good run, especially together with GE. GM is acting spectacularly, 24.62 on the 24th of August. It's at 9 points high. It's at 33 right now. And that's the reason why we've gone in, is because I'm talking about the orders. Everywhere I go, the new cars and GM and Ford are way up on the list. Actually, all American cars. And I'm looking at it and I'm saying, maybe that's the reason why stocks like AZO are becoming vulnerable, and that's the auto and car truck part area. So that's saying to me that I think some kind of internal low was made, and that the residual low could be just one weird set of circumstances, a fright that takes on the market, and then we'll see whether we break that 15,370 Dow low. Remember, the S&P didn't make that low. The S&P, the SPY didn't. 182.40 was its low, but the October low was at 181.92. Oh, so it missed it by 30 cents. So this is going to be a fascinating period, because if I am correct, the cyclicals, which shouldn't be rallying very strongly now, are rallying fantastically. So I think that there is more upside to go. I still can't say for sure. And look, we haven't broken that Roman candle that we spoke about. The SPY did a lot of testing, but it didn't break. So I think that we're looking at that idea that within 6 to 8 weeks of August takes us to October. Well, we're already there, October.
There.
Yeah. So somewhere around here in the next week or two, either we're going to get just a slew of out of the blue bad news, takes
Right.
the market back down. This is a very important moment. That's what I was saying 2 days ago, that it was a very important session on the close, not the session itself, but where it closed, either on the upside of the Dow, and then the Dow, if you remember, I'll just go to the DI, it's easier. The diamonds went to test the high of the 17th, 169.44, and the diamonds did 165.49. No, I'm sorry, it was 169.66. So what we're looking at here is a situation where a chunk of the work that we were looking for has done. Now, here's another aspect you didn't ask me about. I'm just going to add it here, and that is the commodity index. If the commodities are starting to move off the bottom, and you might recall that I had this whole thing going on with Exxon, being an oil-related stock, having that Elliott wave to the downside in the fifth wave, based on the Chapman wave on the weekly chart, saying that this is where we could have a bounce, and I intended to think of it as a bounce, not the bottom, but the bounce, although the monthly chart went exactly to the 200-period moving average with a Roman candle at the bottom, which says if it closes this month above this high of 79.29, that could be very positive to go towards the 81.57 9-period moving average in the monthly chart. So once now I've got the, let me check the USO. Once we've got oil at least attempting to find a bottom, and many of the commodities, and certainly gold is acting much better now. No, it hasn't broken out, but it's acting much better technically. Then you've got some other stocks that you can add to the S&P, within the S&P, like the multinational oils, and that helps. So all in all, very short term, I think we made some kind of a top this morning. I think that we're going to be pulling back into Monday or Tuesday. That's where it's going to give you an opportunity to maybe look at some of the other cyclical. You've got to be real careful. I'd avoid anything to do with healthcare, whether it's biotechs, pharmacy, healthcare insurance, healthcare itself, stocks, and I'd be looking at the cyclicals. Does that kind of cover a lot of what you're thinking?
No, that makes a lot of sense. I mean, your point about some of these stocks look like they may have already had the residual and internal lows, which looks pretty apparent now. And, in fact, if you look at the IWM, it actually had an internal low. It looks like possibly below that residual.
Yeah, I had a question today. When would you be shorting the IWM? And I said, hey, I don't know if I am going to short the IWM at this point. Not right now, because it looks like there's enough strength to come off that up channel in the monthly and a trough C in the weekly. I don't think it looks great. That's one of those that keeps me in the camp that says we should have a residual low at some point.
Right,
Hey,
and
I
that
hope
just
that
makes me
helps, Travis.
suspicious. Well, that just made me completely suspicious on the S&P now as to whether or not if the IWM hit a new low and it's recovered this sharply, is the S&P, it didn't necessarily have to go back to that 1867 low. Maybe the low is slightly higher than that. Now we're maybe off and running again.
Correct. That is the thinking right now, but I'm saying your individual stocks are going to give you a little bit of sense of being away from the tide. You're just kind of negotiating a trend, and that's really what you want to do right now.
Right. I appreciate it, Basil.
Thanks for calling, Travis. Always appreciate it, and good questions. Let's go to Mike in Ormond Beach. Mike, how are you?
Great, Basil. I would hate to have you repeat yourself, but I only listened to a little portion of your show, and I'm on my break now from work. But my question...
Yes, you got a question? Let's go right to it.
Regarding the Dow, would be, do you think that we could still possibly take out the August 24 low of the Dow?
So now what I'm looking at is a lot depends. Now this is a very important week for the Friday close at 4 o'clock. A lot is going to depend on the support that we have in the Dow this coming week, because between 19,000 and 17,000, 16,000, these numbers are moving so quickly, 16,900 and 16,800, if that's all that the market can give back, the Dow can give back next week, and then make even a nominal new high, recovery high that is, I would consider that the 15,370 is going to be difficult to break for more than a touch if it even gets there. This is the way I'm thinking now. I have to be a little flexible because this is now as I say, a bifurcated market. I have to include what will happen if the sector like the healthcare actually does start to take off to the downside. Money will be coming out of that and will impact some of the other indices, but that money will also be going back into the cyclicals. That's why I think the Dow is going to be helped. This might turn out to be the great bull market of the Dow that's been missing all these years since 2000. I don't know. I'm just saying that's what I'm thinking. So to answer your question, at this point, it's going to take a lot of negative news to really smash back down to 15,370 in the Dow. But you could see the IWM maybe pull back steeper in a percentage terms than the Dow. And you will see something now. The RTH, what happens with the retail? See, so this is a complex question because the retail index looks like one by one, some of these stocks are really beginning to get hammered. But the price is held up. So it's a complex situation because I like harmony. I like to see the major indices that I look at, like the retail index, like the IWM, like the New York Stock Exchange. I like them all to be in sync. This is the phase that where I think it goes out of sync, and because it's lopsided, it kind of puts a bit of a cap on the upside, but it might put a base on the downside of something like the Dow. Am I answering your question sufficiently?
Yeah, pretty much, Basil. But the main thing I heard you discussing from the previous caller was at this point, you think that we will have a residual low. It may not be as low as the August 24 low, but it will be a low where I'm assuming the VIX will spike up and everything. And
yeah, and we might not see the VIX get even close to the 53 level because that was done in the internal low. So the residual low is where a lot of the damage has been repaired, but you've still got the news media trying to focus on the negatives. And the negatives can sound terrible because they include warfare or whatever you want. You can just name it, Republicans, Democrats, I don't care what it is. But what happens is when you look at the internals, you find that GM isn't even, maybe, I'm just saying maybe, isn't even close to the low that it was at. GE doesn't even come close to its low. And that's where you can get a low that's formed. And I'm also watching the SMHs because Intel has had a fabulous move. I don't think it looks great right now, but it's showing enough internal. Let me just get to the SMHs. Yeah, you see the SMHs in leg B up in the weekly chart, helping the monthly chart a little bit. This is a very important period because it's a selectivity that I'm looking at. And if I look at the PPHs, which is the pharmaceuticals, they're looking terrible. If I look at the XLV, so I'm hoping I'm answering your question so that I can give you the sense that it's going to be selective. The Dow is acting the best of all. The S&P's next in line. And then you've got the Qs not acting very well. And then you've got the IWM at this point not acting well. And something like the XLV, the Select Healthcare, is acting very poorly. So I think it's the old leaders are going to falter and you're now getting new leaders. So that's really the way I would like to answer you. So the answer is I don't, at this point, it's going to take something really bad to break 15,370. But a lot depends on how the Dow is able to pierce 17,300s on the upside. If it does it next week, that's going to be very positive. If it stalls and goes back to the 16,700, it says sideways continues. Hope that helps a little bit.
Yeah, it does. And if you have time, can you go through your Elliott wave count? Your long-term Elliott wave count?
Okay, well. Okay, we'll be back with mine.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We got. I'm not sure. I think Ben had to drop. I know that it's tough for him to stay on the line. IBB. I'm only looking at this as on the short side for now. So that was. If the question was the IBB is trading at 307. Oh, if I would prefer to see an H pattern so that it can even get to the 313, 315 area. We are short that in the opening call from way up at the top. But in the meantime, I'd like to add to that. I'd prefer to wait for a bounce because it's stuck in the range. I don't want to be caught shorting at the bottom and then buying at the high. I'd rather wait for a bounce. But at this point, it looks like 284 is going to be taken out within the next 2 weeks. And if it does get taken out, then the IBB could go. There should be a decent rally at some point. I think it's still a little early for that. So I hope that helps. Let's go to Brent in Martinez, California. Brent, how are you?
Doing well, Basil. How are you?
I'm well, thank you.
I'm kind of happy and frustrated at the same time. I've had probably one of the best weeks I've ever had. My account doubled this week.
Oh, fantastic.
I've talked to you about this in the past, that gold trade I try to do with the GLD.
Yes.
the quick trade. And I'm just hoping, I'm doing a shout out to John and Philly. I hope he did the trade. I'll feel a little better if he at least got the thing. I was looking at gold yesterday towards the close. It had come down. It was about 139 roughly.
Right.
And the GLD was there at 109, about 15, 0.15.
Okay.
So I could have picked those up for 15 cents. Today, the 110s, the weekly 110s.
Yes.
And then, of course, today they're up about almost $1 on the thing. So, you've talked about trades that you've kind of had set up in your mind and you want to do, and you second guess yourself. And
I had that happen a few times this week. Even the trade we had for FCX copper, Freeport McMoran at 824. I mean, I took great profit, and I looked at it and I thought, if Icon is in it, stay in. What are you worrying about? He's not going to be, just stay in, be with the guy. But of course, I overthought it, and now we lost even a bigger profit. But you know what? As long as your thinking is correct, it's like I played tennis the other day and I lost, and I felt great. My partner said, what are you feeling so great about? I said, I thought I played very well. You just played better. And that's the way it is. So as long as you're thinking, if you were thinking of doing something and it went the other way, that's something completely different. So you just missed it. I mean, these things happen. Now, what I wanted to say is that GLD is in leg D. It had made a peak D. It's just about to bump into resistance. If I take it, I did the gold chart. I'll do the same thing here. And it's just about to bump into resistance. So I think that gold is acting extremely well. I think some of the gold stocks are acting very well. But most importantly, in the GLD, if it goes to 111.20, somewhere around there, there's a real good chance that the magnet of 112.17, the 200-period moving average, will just drag it up. So that's what's going to be really important for the GLD next week, just talking about the GLD, is that it has the 112s, the whole 112 area up to 113.30, say. That's going to be an area of resistance that if it just goes right through it, this is going to be the first time that I'm seeing the monthly chart start to show the potential for follow-through in October that is different to other months. At this point, it's acting really well, but really, look at the weekly chart. I mean, the price movement, what's the big deal? It's had much better. In fact, this is the smallest movement it's had since the low of the week of the 11th of September to where it is now. The difference is that the technicals are finally kicking in very nicely. So just thought I'd go through that.
No, I appreciate it, Basil. Thank you very much. I'm going to focus on the positives from the week. And
yeah, fabulous.
Have a great weekend. It's always a pleasure talking with you, and I'll talk to you soon.
Thank you very much. Congratulations on a fabulous week. I think that's terrific. Thanks, Brent. And thanks for calling in. We always appreciate it. Folks, Basil Chapman, I'm stepping aside now for the weekend. You've got Nico and Paige coming up and all these great hosts. I'll be back. Check out my opening call. I think you're going to find it very interesting. I'm going to have a lot of new detail this weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.